Ladies and gentlemen of the interwebs, welcome to the Beacon Roundtable. You got myself and Jangle out here with the news and takes of the week. A lot of things going on this week. It's gotten pretty busy, I will say. A lot of buzz and activity. Jangle, what do you think about the past week so far?
Oh man, well, I guess we've got a lot of topics prepared. Feeling good. Feeling like we got a little bit overheated, and so I think I said, I don't know if it was on this call or one of our mastermind calls, that the last time Bitcoin put in 8 weekly green candles was like, I think November of 2017 and like July of 2015. I might be switching those months and years up, but maybe it was June and November of 2015 and 2017, and the ninth week in both those instances was a red candle. 14 and 15% down for each of those weeks, in the ninth week of those rallies. So was expecting the majors to maybe cool off a little bit. Some altcoins showing a lot of resilience. Some social metrics looking more and more bullish. They're definitely lagging the price action that Bitcoin and ETH, but especially Bitcoin, have seen over the last couple months. But the social metrics are starting to come back. So maybe that's because of some of the airdrop things. Maybe it's just because people are now kind of waking up to Bitcoin being back. Maybe it's the ETF. I saw on CNBC they were talking about the halvening, and they called it the doubling. So they're trying their best. But yeah, I'm excited. It's been a good week, and it's been a great Q4 so far.
That's a word, the doubling.
Yeah, yeah, really.
Interesting. Well, we'll go ahead and get right into it. We have 2 weeks left in the year. Just as a heads up, we are actually not having a call in 2 weeks. We're gonna not really sure what we're gonna do there, but thinking about maybe doing the highlights episode or something like that. But just wanted to quickly open with things that has been my favorite part as we end here. Definitely, I think the biggest favorite part has been a lot of projects that I've been supporting a long time finally coming to the forefront, at least in this run up to the bull. Happy about that, of course. Happy for Beacon. What about you, Jangle? What are the things that have kind of been the highlights of a year that was 2023?
Man, from a crypto standpoint, the highlights were I mean, I had almost an entire year after the FTX collapse. There was an opportunity to buy ETH below 1,000. And then pretty much all of 2022, you're able to buy ETH below 2K, until just very recently. A lot of time below 1,500, a lot of time below 1,700. So really getting to pack my bags. And then coin as well, which is now my second largest holding after its more recent run up. And that's that I had plenty of time to accumulate under 40, 50, 60, $70. So yeah, so really thankful. So I mean, we've always said the bull markets make you money, but the bear markets make you wealthy. So yeah, there was like a lot of fear and a lot of apathy. Really, I would say 2022 was a lot of the fear. 2023 was a lot of apathy, and so was able to build some really strong core positions in assets that I'm really excited to do some multiples over the coming quarters and years.
I mean, to kind of echo Frank's, you know, mention here, I think we were all just kind of talking about the Shadowlands and, what happens, what are these stink bids that we're going to try and grab. I think, some people are like looking at Wix like 750, 900, and just how much the difference is, I guess, in a year. Uh, and how much, and I guess you could definitely say a lot of building has been happening to get to this point. So, uh, excited to see what's to come. There's been a lot of building, a lot of things going on. We'll go and move into, the first thing on our agenda today, which is specifically for institutions. Coinbase is releasing Project Diamond, which is a smart contract powered platform for institutions that's actually going to be on top of Base. Jangle, you kind of picked out this article. Want to talk a little bit about it for me?
Yeah, I mean, I feel like Coinbase is really putting the entire industry, at least from a US perspective, really on their back. They're building the infrastructure here to basically allow any firm that wants to create digital assets or tokenize really anything, to be able to partner with them and do so. So yeah, I mean, think about the specifically asset managers and the tokenization of debt assets, the tokenization of securities and bringing those on chain. It's really, with this sort of infrastructure, there's a lot of opportunity for expansion of the amount of liquidity that can be on chain, the amount of financial activity that can settle on chain, probably predominantly on Base, and then ultimately settle to Ethereum L1 since Base is an L2. I think this kicks back, some bullishness to the Optimism Foundation based on, more sequencer revenue and more activity on Base, which finds its way to Optimism, which finds its way to Ethereum, which finds its way to the overall ecosystem as more liquidity is able to do more on chain. Yeah, it's incredibly bullish. I'm really excited for Coinbase and a lot of the assets that I just mentioned, and for asset managers and institutions to be able to tap into blockchain liquidity, and L2 and Ethereum related capital, to raise capital, to swap debt obligations, to create, essentially some of the largest capital markets on earth are debt obligations. So I'm really, bringing the infrastructure to put those on chain is huge. Yeah, I can't get any more bullish on Coinbase or ETH, which are, in my eyes, the two sort of very key pieces of infrastructure to make this possible, as well as the OP stack as a whole. So I'm super excited about it. We'll see how long it takes to start getting some institutions on board with it.
Yeah, and they're going to be coming into a crowded platform. We talked about a couple different institutional focused solutions on this podcast. All year we've talked about the Canton Network, which is Microsoft and a couple others trying to get together with their own blockchain. And there's going to be a lot of eyes and hopefully a lot of block space for a lot of institutions to come in and actually make headways with their clients, and hopefully retail can match that energy, and we get more people here using these services, and just bringing more inflows back into the system. Speaking of Base, seamless protocol, something we actually were talking about in our calls last week. If you actually participated in their Zeely or probably Galaxy campaign for their OG points, they didn't actually put out a token to market. I mean, they have now, but they went ahead and just airdropped it to anyone who did the OG points, which was pretty cool. We have quite a few members who did this. What's interesting about it is that the SEAM token, which is their governance token, then made its debut as the first Base blockchain token on Coinbase, which I still find interesting because they still won't list Phantom, but they'll list SEAM.
Well, it's probably a good thing they didn't list Phantom.
Yeah, of course. But I'm just like, it's just one of these things. It's like people are talking about these coins that you can't actually get on Coinbase, and they bring a Base governance token for a brand new project on.
So. Well, I think they might have partnered with the devs. Is it the Aave devs that built this, or is this a totally different team? A collaboration, let's see, a collaboration among several contributors from Web3 backgrounds: Aave, Uniswap, Coinbase, Maple, Certic, Ample4. So this seems like a protocol that Coinbase is actually involved in the development process. They probably were able to get fairly strong assurances on the tech stack because, one, unlike Phantom, right, the Base chain itself is built on the OP stack, which Coinbase is a core contributor for. So they have very strong security assurances and risk assessments around the infrastructure stack. And then their work, it's an Aave fork, right? Pretty much. So not a whole lot of technical risk on the application layer. And then when they're actually building and deploying this Aave fork, they're they're involved in the development and the deployment. It's deploying on their chain, and they're working with like OGs in DeFi, including the development team of Aave itself, in order to have this to be a secure deployment. So, I think it's apples and oranges comparing it to like Alt-L1 listings, and other listings. Am I super bullish on this? Well, the bull case is that it's on Coinbase. We're going to start to see more Coinbase ecosystem tokens get basically this approach, right? Where Coinbase is involved in development, they're involved in the deployment, they're immediately listing the asset, they're capturing the volume. Like, it's bullish for Base, it's bullish for Coinbase's trading business. It's just awesome, right? From that perspective, for my bag specifically, for ETH, for OP, for Coinbase, right? Just makes a ton of sense. Is it bullish on the Seam token? Well, it's an Aave fork. My default stance on Aave fork is farm and dump. Could there be some retail that comes in and just apes this? Probably. Like, it's probably going to perform better than most Aave forks, but that's not really saying much. I'm looking at the applications on Base on DeFi Llama right now, and like, the application ecosystem is like still not very robust. Like, Seamless is now number 1 in TVL. It's just ahead of Aerodrome.
It's number 1 already. Wow.
Yeah, it's just barely ahead of Aerodrome. Very close. Perhaps we could pause the podcast, deposit some size in Aerodrome, and cause the flippening live on air. But right now there's like also caps on how much you can borrow. So there's like limited looping strategies that are available on Seamless from my understanding. So I'm not going out and buying this token. I might deposit some ETH or something on here. We've got some CB sitting on Base, so we might just chuck that in here or something. Fairly safe, likely. I'm really optimistic on more things being launched. When Friendtech launches a token, I'm sure that they're going to work with Coinbase to maybe get that listed day one on Coinbase as well. Besides Friendtech, like, is there really anything that's like super novel or cool about, like, why would you bridge to Base right now? Now, with their KYC infrastructure that's coming out, combined with their Project Diamond that we just talked about, now we're talking about some serious infrastructure that differentiates Base amongst other chains and L2s. But we're not quite there yet to all these things fully being implemented and like available for all developers and products being shipped based on this infrastructure. I think we will be in the coming months and quarters, and at that point, I think people are gonna wake up to Base Chain and Coinbase and this ecosystem hopefully flourishes.
I do think it's a little bit of a sleeping giant, right? So we have big places who are just very quietly making their way into Base. We're talking about Curve. We're talking about Curve, Maker, Compound, Maple. Did I say Maple already?
Maple's a big one.
Reserve. We have quite a few protocols making their way and just being they're lurking right now. So I'm very curious to see where a lot of this goes. But yeah, as you mentioned with Project Diamond and just some of these other things where Coinbase is really going to start putting a lot of eyes on this blockchain. We could definitely as retail investors, get in there and hopefully, reap the rewards of a lot of there will probably be some incentives. I'll be honest, I'll be shocked if there aren't incentives moving forward to get people to come over. So bullish on Base.
Yeah.
So we just talked about Reserve, and they're big in the Latin American market. And an interesting insight from Circle themselves: over 51% of Latin American consumers have paid with digital currency, and this is not shocking to me. When we actually talk to people who want to join, the Beacon Mastermind, many of who come from Latin America have looked to crypto because they are in a situation where they have, truly devaluing currency. So having currencies that can hold their value is a very meaningful thing to, specifically to Latin American, Asian, other large countries where they have issues with their currencies. So, Jangle, what was the main takeaway you had from this that you thought was particularly interesting here?
Honestly, like just the sentence up there, the global stablecoin settlement exceeded $7 trillion compared to 14 trillion settled at Visa and MasterCard. So like, we like to think that we're early. That is half of dollar settlement. And I don't know if that, it's not all dollar settlement, right? Is going through
Mm-hmm.
Visa and MasterCard, but like half of the amount of money being settled through like the two major payment processors is already settling in stablecoins. Now, is that because stablecoins have the same like economic impact and facilitation as Visa and MasterCard? Not necessarily. It's just the velocity of money can be a whole lot faster whenever there's no intermediaries, there's next to no fees, there's very little friction. Once you're set up in crypto, it is so much easier to send and receive payments, and so much cheaper and so much faster. It's actually absurd. Like, even if that alone was the only use case of crypto, of blockchain infrastructure, of stable coins, like if that was it's just purely updating the back end financial settlement infrastructure, like that's already a multi-trillion dollar sort of industry, not in terms of revenue, but in terms of like valuation. So yeah, the fact that Latin America, which is a overall very quickly emerging economy, has a lot of tailwinds based on the geopolitical trend of nearshoring, and the sort of like deglobalization that's occurring. Of course, the demand for dollar access is very high. Capital controls are very high. So it's like the market that's teed up to be on the forefront of stablecoin and payment adoption. That's absolutely how it's playing out. And we're already at half of the settlement of Visa and MasterCard. And I wouldn't be surprised if by the end of 2024, stablecoin settlement literally flips Visa and MasterCard, and nobody is really woke to that fact yet.
No, I agree, and when I think about this, I think about what's going on in Argentina with the new president Milei and how he's he's axing ministries left and right. He is set to really flip Argentina's economy on its head. So curious about that. One thing we don't have in the agenda today as well, El Salvador with their volcano bonds. They're going live in 2024 for Bitcoin. Yeah, it's going to be a very interesting market in Latin America. Uh, Curious to see what protocols do to hopefully incentivize more adoption of crypto in Latin America. It's going to be interesting to see where we go from here for sure. All right, moving along. The S&P has rated USDC, USDP, and GUSD as strong stablecoins. USDT, DAI, and FDUSD, which is First Digital USD, as constrained or middle of the road, and Frax and True USD, which is TUSD, as weak.
Yeah, dude, I think the main takeaway here is that USDC, USDP, which is the PAX dollar, and GUSD, which is the Gemini stablecoin, are viewed by the S&P Global Ratings. So yeah, that S&P, um, as strong stablecoins. Is that the word they use? Now I'm not here. Like, I didn't include this um, to FUD Tether. Nick Carter, who is a stablecoin Giga Chad, former Bitcoin maxi, is I say that just to meme on a little bit, but unfairly maligned, but will eventually fail. I saw on that same CNBC interview where they mentioned the doubling instead of the halving. That correspondent, I forget his name, said that he was custodying at his firm like $90 billion of securities owned by Tether. So like, I don't know the audit situation on Tether, but according to S&P, what they view as the strong stable coins are USDC, USDP, and GUSD. Based on the collateral and the mechanisms, they view Frax and TUSD as weak. USDT, DAI, FD, First Digital USD, or like middle of the road constrained. It's just interesting to see, like, this is the opinion of the S&P Global Ratings. So super cool, super interesting. Like it like pinched me. Like I can't, like, am I dreaming? Right? Like we're at the point where the S&P global ratings is like rating stablecoins. Like, dude, we're no longer early. Like, we're
What
here.
is this
Welcome
life?
to Valhalla. Yeah.
Is Frax mostly USDC? I think the answer is yes.
Yeah, there's a lot of protocol owned liquidity in like Curve and like liquidity pools and stuff. So, and a lot of that makes up USDC, and I think like DAI and ETH, but you know, a lot of it's protocol owned liquidity that's in liquidity pools, not necessarily like treasuries, right? Or spot USDC custody at Coinbase, right? So maybe that's why
I mean,
it
I'm not
got
shocked by that. It's an
the lower
algorithmic
rating.
stable coin, so I think they're always going to put algos at the bottom.
Yeah, I think at this point it's 100% collateralized, or like
That's good.
above 97 if it's less than 100. Last time I checked, it was high, and they were striving. They had passed a proposal several months ago to get to 100%, and I think that they're there now. I could check.
I do want decentralized coins like Frax, even MIM, or of course, somewhat DAI to do well. We need these types of models in our financial system. So, hopefully, most others that have tried to go the algorithmic route didn't do well, but hopefully Frax can continue to at least hold a banner for it as something that can do well. So.
Yeah, it's a complicated topic. It's really hard to actually make a truly decentralized stablecoin that can scale. You know, I've talked a lot in the past about the stablecoin trilemma, and yeah, there's just constraints with adequate decentralization. You're going to have like low capital efficiency typically. Like, if you really want a crypto native decentralized stablecoin, it's ETH, right? One Gwei equals one Gwei. That's how you're going to get like a truly crypto native bearer asset, right? Or and so, or you hold spot Bitcoin, and maybe there's some advancements eventually in Bitcoin smart contract networks like Stacks and stuff. But yeah, I have like literally no problem. I mean, I'm a decentralization maxi, sure, but I have no problem holding USDC. I think it's like naive to think that we're actually going to get to a 10, 20, $30 trillion market cap for this industry by being entirely decentralized. I think the infrastructure and the settlement, should strive for decentralization and anti-fragility, but a lot of the winners at the application layer, just like in Web 2, like a lot of the winners are going to be centralized solutions, because most of the time you can do things more efficiently if it's centralized, and if it doesn't need to be decentralized to actually like function and to have an adequate amount of anti-fragility, then it won't be decentralized. Like, the centralized thing will win, right? So, because it'll be better and cheaper and faster. So, yeah, I think that we do have some crypto native decentralized stable coins. They're just not scaling at the same rate that things like USDC and Tether can, because, to be honest, like USDC and Tether, they make tons and tons of money. They're more capital efficient. They're more prolific. People kind of understand the model more. So yeah, I predict that we'll continue to see rise in USDC and Tether dominance. But I would like to see USDC make some strides against Tether over 2024. I think it will, but it's not super high conviction. So
As long as Tether continues to make billions of dollars per year, they've got a road ahead of them. But we'll see. Obviously, it would take an interesting thing to see Tether fail, and I honestly I hope that does not happen.
I hope it doesn't happen, but I do think the DOJ is not going to sit idly by. I think they're going to put a lot of heat on Tether, and I think that we're getting to the point where even the politicians, for as dense as they are starting to realize that stablecoins are a net good thing for America, because they create marginal buyers of U.S. debt. And so I think that, depending on how the next election goes in the next couple of years, we will eventually see some stablecoin regulations that come out and define stablecoins as tokenized treasuries, basically like tokenized US dollars that are backed entirely by government debt. And anything that is sort of like not playing ball is going to face some regulatory headwinds, going to face some action from the DOJ. And I think things like USDC are poised to be the major winners of the space. And we're kind of seeing, based on the Binance action, that this like move fast, ask for forgiveness, not permission approach that really paid off from, 2013 until 2021, versus Coinbase and Circle's approach of try to be a bit more compliant, play by the rules, engage with regulators, like don't run away from US jurisdiction, like think about it long term and be the de facto solution. Like I think that's going to start paying off over the next few years.
Yeah, unfortunately, there's someone standing in the way. Unfortunately, speaking of segues, if you read the title of today's presentation, I do have a haiku that I wrote for Senator Warren. That haiku reads: Senator Warren, your cause champions old failures, decentralize them. That was it.
Wow, beautiful haiku.
Thank you. It was hard to specifically hit the syllables there, but ultimately, this is the same bill that she's been pushing on the Hill for months now, for anti-money laundering and KYC. She's very big on the pulpit that crypto funds terrorism, crypto funds the crack epidemic, crypto funds everything that is terrible with the world. Basically, she is pretty much just anything that has to do with banks for the most part, because during this hearing that they recently had last week, Jamie Dimon, the CEO of JP Morgan, just literally came out during there and said that, he said that Congress should if he was the government, he would ban crypto altogether. I think he actually said Bitcoin, but he pretty much meant crypto, which is really an interesting statement coming from him, considering that JP Morgan has had Onyx since 2020, which is their own blockchain tech and digital asset firm that pushes nearly $1 billion in transactions per day. So I don't know exactly what he's trying to push here, but if he's the face of banking, guess what kind of messes with banking? And that probably is going to be DeFi and crypto. So maybe he should talk to Brian Armstrong and Coinbase and get in with Project Diamond or something like that. His last name is Diamond. So got him. Sadly, as part of that narrative, unfortunately, Representative McHenry from North Carolina, part of the big blockchain caucus, is not seeking re-election. He's retiring. He's leaving the Hill. So that's kind of led some interesting buzz about what's going to happen to, at least with the stablecoin regulation moving forward. One thing that Senator Warren has done, she's gotten 3 of the 5 sitting members of the banking committee on with her. And so that could be an interesting mix at the table. But, Representative McHenry has mentioned in an interview recently that he does believe that there is a lot of negotiation room with the Senate with regards to stablecoins. So something that we'll definitely be looking at, something that will be very poised to make sure that hopefully there's something that happens at least in the next 12 months. Otherwise, with MiCA already coming into effect in Europe, more places are just going to leave. One thing not in the agenda as well, KuCoin settles with New York for $22 million to leave. So, queue up the Palau.
Yeah, I linked standwithcrypto.org. I don't like to spend too much time on this Elizabeth Warren stuff because, like, I don't think she's like ever passed a bill, or like she's proposed dozens of them, perhaps hundreds, maybe one have passed. I don't know. So she doesn't actually have a track record of getting much done. But I'm here for the seed and the hate. But yeah, I think that Jamie Dimon really has no leg to stand on, considering that JP Morgan like banked Jeffrey Epstein, it like literally like a cabal of global elite pedophiles. Like, I don't know how much more evil you can get than that. So it's like, don't throw stones if you live in a glass house there, buddy. Like, we can kind of go tit for tat quite a bit there. So let's not, because that's not really conducive towards packing my bags and like decentralizing the world. So we don't have to spend too much time on it anyway. Yeah, I think that there is nothing virtuous about creating a financial surveillance state. There's no jurisdiction that the government has over, like, they don't have a right to your financial information. They don't have a right to control like your economic activity. Like, that's not the social contract. Blockchain and crypto infrastructure is the technological resistance to that. It's the equivalent of the printing press, distributing the ability to gain literacy and find spirituality without going through an organized church. It's the equivalent of gunpowder's ability to create a willingness of the people to be governed and not settling for basically authoritarianism. Crypto is the technological innovation that enables resistance to the financial surveillance state, and it gives everybody access to peer-to-peer participation in economic activity. There's no bill that's ever going to stop that. Like, as long as evil men die, or women in this case, liberty will never perish. She can say whatever she wants. It's probably not going to pass as long as we all go to standwithcrypto.org, make the right calls, vote the right way. And if it does, then what are you going to do? It's your duty to break unjust laws. So we'll continue to use crypto. We'll continue to use self-hosted wallets. We'll continue to live our lives as free people, because it's our God-given right to participate in free financial activity.
Preach, sir.
I'm sorry for the political rant there, but you asked for it. We're putting Elizabeth Warren on the on the docket here.
Just as a reminder, anybody who's unfamiliar with the bill, it extends the KYC, AML, and Bank Secrecy Act parameters to miners, validators, wallet providers, basically a whole bunch of things that, frankly, the U.S. has no jurisdiction over, and probably maybe the miners, if they're running on U.S. land. I don't know. I'm not an expert on this thing, but it's just odd.
It's untenable. It's you can't basically force every validator in a decentralized network, every node participant in a decentralized network, to KYC and produce tax information on every user of that network, and KYC information. Like, it is just not workable. So like, it's posturing. If it somehow anything like her plans or her ideology passes, then there will be just a mass exodus of entrepreneurs from the United States, and there will be mass non-compliance from citizens of the United States. So at the end of the day, like, there, sometimes you just gotta draw a hard line. But I think we can. I mean, we'll win these fights in the courts if we can't win them in the legislative branch. But there's a lot of shuffling that can happen around. I think Elizabeth Warren is a senator out of Massachusetts. I don't know. Like, you've got to be brain dead to be voting for Elizabeth Warren in 2024. But we'll see. I mean, she'll probably get reelected. I think she's got fairly decent ratings in her jurisdiction. Sad to see McHenry go. But like, I'm realistically, I'm not worried about this stuff. Like, this is posturing. This is the final sort of the final lashing out of a like irrelevant technology. Like, of course the wagon manufacturers are like trying to lobby against forward, right? Like it makes total sense. So
The wagon man, all the last standing wagon manufacturers.
yeah,
Stand up and fight.
yeah, it's really. I mean, come on.
All right, moving on. Speaking of things that are, we didn't even talk about ultrasound money, but the ether supply has hit the lowest level since the Shanghai upgrade. There's been a lot of activity going on. Whether or not you're looking at trades, whether or not you're looking at inscriptions, all kinds of things have been helping with the gas. So,
you know what else has hit its lowest level
this
year? The amount of likes on the stream. So if we could get some of the likes flowing in from all the viewers we have on the stream, I'd really appreciate it. Sorry about that little.
That's fantastic. That was fantastic.
No, but yeah, the lowest level since Shanghai, lowest supply since Shanghai so far. Right, we've still got quite a bit to burn here.
And if you have not been to ultrasound.money, definitely put this in your bookmarks if you want to check to see how your bags are doing. Oh, I like that little UI thing with these little tiny little portions.
Yeah,
that's cool. How did they do that?
I don't know. That's a finesse of design that I don't possess.
Same here, and I'm an IT guy. That's crazy. But yeah, anyway, just looking at how we're looking with supply, and obviously this road to ETH being deflationary has been really fun to watch, and obviously it'll continue as things scale. So, any thoughts on this, Jangle, before we move on?
Man, let me scroll down a little bit and see the big burners over the last year or so, year and a half. Uniswap, ETH transfers, tethers, OpenSea still somehow. OpenSea's been really just absolutely floundering against Blur. Blur have been catering to more degen and advanced NFT traders. OpenSea, I think their revenues are down like 99% compared to 2021. But they're still burning a lot of ETH apparently. And then Arbitrum. So Arbitrum, ZK Sync, Coinbase, Optimism, Linea, Optimism again. So there's like maybe these multiple optimisms as you scroll down on the burn leaderboard are different OP stack chains. Not sure, but it's good to see activity return back to the chain, and I'm hoping that as we move into a structurally higher demand for block space, we see some of these L2s start to jump up the leaderboard. Like if you look at the last 7 days, yeah, Linea's up there, Arbitrum's up there. Somehow, dude, Banana Gun's up there. That's crazy.
Well, Maestro's a bit ahead of them. So when we're talking about wallets, we're talking about Telegram trading bots. So that makes sense. Yeah, I think Linea being up there is a little weird, but that makes sense considering how high their gas has been to do their Linea voyage. But
you think it's a lot of Sybil farming?
I don't know, but it could be. It could be. But Uniswap doing look at that. The amount by Uniswap plus the fact they're charging fees on the front end.
Just the front end, though, because this is their router contract.
No, I know, but if there's a fraction of that's even anywhere close to front end, Uniswap is banking right now.
Yeah, last time I checked, they're making like not quite $1 million a day, but it was like somewhere around like 30 million, 35 million annual revenue from the front end fee they were looking to collect.
That's cool. Please reward your uni stakers.
That's cool. Hey, like at what point is uni like a good buy just based on like, okay, assuming that maybe one day there's like, okay, if you put a 10% possibility that the fee switch is turned on in the next 2 years, like what price do you like, okay, I'll buy some uni for the asymmetric upside there. At a $6 billion fully diluted value, no thanks. Yeah, no thanks.
I was about to say, I was like, the FDV is going to be something monstrous right now. So
that's like, I mean, I guess like it's worth, in my opinion, it's probably worth more than that if there is a fee switch, like if there is a value accrual mechanism, like that's probably a pretty good price. It's at least a good price. I don't know if it's a great price, but it's at least a good price on a great protocol, which is something like what Charlie Munger would say, right? I don't know if he'd use those exact words, but he'd say it's better to buy a great company at a good price than a mid company at a great price. So it's a great protocol. If there was a fee switch turned on tomorrow, I'm sure it would moon. If I knew for a fact they turned the fee switch on, I'd probably be willing to pay at a $6 billion valuation to own some. But yeah, I'm sure by the time by the time they announce that there's a fee switch, I'm sure it'll moon. And until then, like, it's just so speculative to buy some, and all the opportunity cost of holding Uni while everything else there's so many other good things to buy that actually do have value accrual. I can't bring myself to buy it.
How about Sol?
Man, this was a crazy story. I saw a lot of people on my timeline freaking out about this. I think some people got liquidated here from this MSOL DPEG. Basically, like, for those who don't know what happened here, it wasn't a hack. From my understanding,
No.
There was just a large holder of a liquid stake token, Marinade Sol, MSOL, that sold a bunch of their LST, causing the price to depeg, right? Yeah, causing the price to plummet because of the size that they sold with. So is this like bearish or bullish? Or no? I mean, I think it's kind of like a nothing burger. Like, we saw the same thing happen with Lido before, their wrap staked ETH and their staked ETH before the Shanghai was enabled, and there was a little bit lower liquidity on chain, and you had a lot of people capitulating into that DPEG. DPEG, I use that term kind of loosely because it's not really a peg; it's just like Fugazi or whatever. But I think was it redemptions that arbed these? Is there a way to redeem MSOL back into Sol? Is there a wait period for that, or was it just people buying the dip here?
I think people buying the dip for sure, because there's obviously a difference. You could probably arb your way, with size, specifically with size, to gain more Sol. If you were to redeem it and then wait however long that the time period is. I don't know what it is, but it wasn't. It looked crazy, but it wasn't terrible for business since it was arbed back, to where it needed to be. In fact, you could even say that business is good for Marinade because of Jito last week with Jito and their airdrop, which was a 5-figure airdrop for the majority of people who are in it, because the Marinade token MNDE has been pushed to new highs off the news of Jito. So if anything, this is just more eyes on Marinade, I guess. Probably there's some people got liquidated in the event that they were staking their MSOL at a place like Tulip Garden, or I'm saying some old names here, or Solend, Step Finance, or some of these other places, even the newer ones like Jito, like Drift, like Margin Fi. But it's I wouldn't say it was a nothing burger, because there's a lot of reaction based off of that. But I do wonder if they had just gone for the redemption, would have been better for the chart. Probably so. They probably would have found a better way to kind of push through it. But interesting thing. So moving on from that, sticking in the Solana realm, it's not quite Solana, but it's something that's pretty big on Solana right now, which is DePIN, which is decentralized physical infrastructure networks. Bosch, big manufacturer of all kinds of appliances, machinery, tools. I have a Bosch drill. I've always wanted a Bosch dishwasher because I guess they're best in class. They're coming out with a DePIN sensor, which lets you share data and earn crypto. Apparently, it is using AI, and it's specifically weather, light, noise pollution, and seismic activity is the sensor that they want to just have a full crowdfunding network, crowdsourcing network for. That's what a lot of these sensors would do, is they would form a mesh network and be able to specifically come back with different, uh, data points and stuff like that. You would earn a specific token, I guess, if you sign up. So I guess the interesting part is they're not using Solana. There's quite a few that have moved to Solana. One of them being Helium, which is an old IoT and also now 5G mobile. If you see the Helium mobile ads out there on social for $20 a month, you can that's where a lot of that's coming from. Hive Mapper, which is Honey. If you see Honey on like Orca, you can. Hive Mapper is for people who drive around. There's like you pay like $400 for a dash cam type deal, and basically they're just trying to create the next decentralized version of Google Maps or Apple Maps that way. And then there's also Render, which is using GPU. We that was a call from CJ 3 weeks ago, and it went super high based on some of the things that were going on. It's just crowdsourced GPUs. So really interesting to see DePIN starting to rear its head. I think it could be a popular narrative for 2024. One thing that Jangle's asked me about is a cache, which is cloud compute, which people are using for other things like mining, things like Zephyr and Tau. Some of these decentralized AI things that are coming aboard that you may see. DePIN could be a pretty big narrative. So interesting to see that we're seeing Bosch as a big name bringing more sensors in. These are all things that are connected. At some point you could just start earning money for doing things that you have in your home. For obviously there's privacy concerns, like if you were starting to do like lights or something like that can measure, or even like what's a good one, multiple companies, at least electricity. If you connect they'll give you a free Nest, like a really nice thermostat, as long as you will report your data back to them, and they'll give you a huge discount on that. What if there was like a decentralized version that you could have that pays you in crypto because they're wanting to gather your data? So what are your thoughts on stuff like this, Jangle?
Yeah, so Bosch, this is not a subsidiary of Oshkosh B'gosh, right?
No, I don't think so.
Okay, so no relation.
No,
Okay,
not
just
to the
making sure
Wisconsin firm. No, this is the
because
German multinational.
I saw the Akash
Mhm.
ad for the AI network, the GPU
Yep,
network.
you did.
Akash and Bosch. I was confused for that. Okay, anyway, there's a couple DePINs. So like Helium, like the version 1 or whatever.
Yeah.
Okay, what make the bear case, right? All of these are Ponzi's. All of these are Ponzi's that are you got to buy this hardware to get this token. People buy the token because they're speculating, but the token has no reason to exist because there's no users of the network that gain value, right? So the difference between a shameless Ponzi and a decentralized physical infrastructure network is the organic demand for the actual product, right?
Right.
So there was one that I saw, I think it might have been called not Honey. It was something where start with an H, I think, where it's like you buy a dash cam,
Yeah, that's Hive
you
Mapper.
drive
That that
Hive
that
Mapper. Yeah.
yeah, that's Honey. That's
Yep.
Honey.
Yeah, yep. That seems super cool because I think that the API services for like Google Street View, and there's like maybe one or two other competitors in the space. I think it's like a 17 or 20 billion dollar annual like revenue industry. And they charge like really high fees for API access to that data. So like I do think there are certain areas like Street View where you could bootstrap a network by saying, hey, we'll give you these tokens for accessing or for contributing data to this network, and then developers can access that API, and they have to pay in those tokens, right? So it gives a legitimate bid, and then the only thing is, okay, well, does this network actually grow? You get network effects, and then is it as good or better than the competitors? And then boom, you can break into this large industry and justify a few $billion valuation for your DePIN network. So like, am I bearish on all of DePIN? No, but like just like anything else, the vast majority of them are going to fail. And man, just like be careful because most of them are going to end up being Ponzi's because there's not going to be any organic demand. So you're just going to buy this hardware to earn these tokens. The token's going to, like what happened with Helium. I think they might be taking another stab at their 5G network. I don't want to, dunk on them too bad because they might turn it around and get some demand. I think it kind of makes sense to have like a DePIN 5G network. But yeah, it's cool. It's cool. The Akash thing seems pretty cool. The crowdsourcing GPUs seems really cool. Having basically a network, a decentralized network to be able to train AI models and query AI models makes a ton of sense. And in a world where AI might get regulated to where you can't ask it certain things, or it doesn't want to talk to you in certain ways, or there have to be these, guidelines on how you're allowed to use AI. You just say, screw that. I'll access this decentralized network with this, AI model that's trained on crowdsourced GPUs, and the powers that be that don't want me to access the latest technology in the way I want to use it can shove it, right? So there are some use cases. I wouldn't say I'm an expert in this sector by any means, though.
Yeah, I think there's been a long graveyard of crowdsourced projects that use blockchain tech for stuff like this. So I think the best thing that Helium could have done was to move to Solana off their own blockchain, because they were not doing well off of that. There's a couple others that are out there. They're interesting. If you've never heard of Deeper VPN, and the thing about Deeper, much like Akash and a couple others, they're actually Cosmos IBC chains. Akash is an IBC chain in Cosmos. So I thought they were on Solana. They're actually on Cosmos, but Deeper is cool because it's decentralized VPN. So being able to have multiple VPN spots around the world, to fight because I didn't even know this until about 3 months ago. The majority of VPNs are owned by one conglomerate. Nord, Surfshark, all those, they're all owned by one giant company. So any way that we can find ways to decentralize and obviously competition's good. It's best for us as customers overall. That would be cool. And again, whatever the incentive metric is. I personally don't want to buy a Hive Mapper because I don't drive anywhere anymore. I haven't for 4 years. So it's just like, yeah. If you're a gig worker, like for example, if you do Uber, if you do DoorDash or whatever,
Uber,
Hive Mapper right now,
that.
you can see.
Yeah.
I mean, I get ads on it all the time in my Instagram and stuff like that. It's like a $400 investment to get in, but all you're doing is just helping build decentralized AI powered maps. So, and then you can just take the honey you get and farm it on Orca for 800%. It's kind of sick, but
paired with what?
USDC, I think.
Oh yeah. Dude, I'm gonna get one of these. I'm
Well,
gonna get one of these. I'm
GG.
going on a road trip, dude. Like, what's your like? I need a vacation anyway, dude. We're going to the Rockies. We're going to the Rockies with the Hive Mapper. I'll catch y'all at ETH Denver. But until then, I'm gonna have to take this call from the road.
There you go. To get a light hotspot from Helium and get your 5G for people. People are buying it. The $20 5G. People are buying it. It's interesting.
Really?
Yeah, I'm here. I mean, on Reddit,
so.
I'm hearing people's boomers and stuff are buying it. So, we'll see. If you're airdrop farming and you want to do Zephyr or some of these other big ones, Akash could be good. You just have to you have the right timing, and you have to know a little bit about computing to kind of get into that. So anyway, the news about Bosch is not that they're not on Solana. They're actually going to be on Kusama, which is a Polkadot parachain. So Polkadot back up? Who knows? We'll see. We'll go ahead and move on to the last piece. Something that's interesting that I thought was interesting is that Uniswap, as it had its end of exclusivity for their concentrated liquidity stuff back on April 1st of this year. So multiple people have gone and forked it. Sushi was one, Pancake Swap was one, and then multiple others. And then now we have Bitcoin sidechain Rootstock. It's an L2 that feeds back to Lightning, that settles back on Lightning with smart contracts on there. Now has Uniswap v3 on their trustless.market website. It's interesting. If you go to newbitcoindex.com, you can also get there from trustless.market. I'll put this link here in the chat for anyone who wants to check it out. These are Uniswap v3 pools using, BRC20 tokens. So as much as I, kind of dunk on BRC20 because, Lightning has no DeFi, there's some things happening. So maybe, maybe buy some Vado or some Mubi or some of these other BRC20s.
Or maybe not. But hey,
maybe
go
not.
Bitcoin.
But hey,
good.
go,
Let's go.
check it
Keep
out.
going. The little engine
NFA,
that
do
could.
your own research.
I think I can. There you go.
Yeah. So obviously this is obviously TVL is super low on most of these, but there's, oh boy, nope. None of those. That's pure speculation. But some of these others, being able to put them in a pool where people can swap back and forth, I think is interesting. So, congrats to them for forking Uniswap and deploying it on a Bitcoin L2. Didn't have that on my 2023 card either, for sure. So, yeah, for anyone who's big into BRC20 and stuff like that, this is an evolution that is pretty significant. Am I gonna do it? No, probably not. But I'm sure there are going to be people that will. So good luck. And that's all we got for today. Jangle, anything you want to end with before we to send us home?
Make sure you're subscribed. Make sure you hit that like button. Really appreciate all of the engagement. Helps us get some new faces in here. So yeah, if you haven't been able to make the stream live, then hit the notification bell so it notifies you whenever we're about to go live. And yeah, head over to btb.beacondefi.xyz and join our free community so you can check out our Friday trainings that we have every Friday at 3 p.m. Eastern time. Until then, we'll see you back here we're canceled next week, right?
No, the 27th we are.
Okay. We'll be here next week. Same time, 1 p.m. Eastern. 07.
Beacons up. Banks down. See you, everybody.